Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of AST SpaceMobile, ticker symbol ASTS. And so here I am recording this on Thursday, July 4th. The market is closed for the holiday. Happy 4th of July. And so ASTS did close on Wednesday, the 3rd, at a price of $11.37, being up about 6% on the day. And I did get a request yesterday from multiple people to follow up on this and, share my perspective. And so all of the lines that I've drawn up here I actually put up in the last video, which came out on June 1st. So just about a month ago. And so the last trading day that was on the chart was here, May 31st. And in that video, I did suggest that we are forming the Elliott wave patterns. And I think that right now we might actually be in the corrective phase of that cycle. So I do think, unfortunately, that the top is in. I do think that it will be pulling back. And so I just kind of wanted to do a breakdown of the analysis that I had previously done, what was right about it, what was off a little bit, and, just seeing where the chart is likely going. And so here, looking at this, I expected to get a pullback to around $6.70. That's why the title of it was Wait for it, wait for that pullback. But we actually only got a pullback the following day, so on June 3rd, hitting a low of $7.56. And so when I did record that last video, price was around, closed at $8.28. So let's say that, a good dip was around $8 a share. Let's say that's what one's average price was. So really right around this 236 here at $7.97. And so, yeah, just the basis of this, thought process, $8 a share. So let's think about that. But before I get into that, where the price went, let's go over where the price has been relative to Elliott wave theory. So I'm just going to flip over here to this graph from Investopedia. And we can see the schematic of the waves to the upside hitting the top at 5, and then these waves to the downside. And so we were previously in the motive or numbered phase going to the upside. And so if I just scroll this up a little bit so Ed's not blocking it, we can see that wave 1 here was to the upside, followed by wave 2 to the downside. And so we saw that here from the low at $2.12. We saw wave 1 up to $5.77, and then a pullback to a low of $4 a share. So that was wave 2. We have seen that completed. Okay, and then going to the next wave cycle, we have wave 3 going up here, which needs to be the largest wave in the cycle for this to be, really an Elliott wave pattern, and then wave 4 pulling back. And so we did see that here from $4 a share up to $9.40, that being wave 3, and then a pullback to that low of $7.56, that being wave 4. And then we saw a move to the high here on June 18th, that being at a price of $12.45, which corresponded pretty nicely to that 100% level that I had drawn up here at $12.10. Although that was based on a pullback to 670, but still, from that analysis, whether it was correct or not, or based on correct assumptions or not, $12.10 does look like it was a good level to be keeping an eye on. And so let's say, working with the assumption that $12 right here on June 18th was 5, so the peak of this cycle. And so coming back to that $8 a share, going from $8 a share up to 12, that's a 50% increase. That's a pretty nice swing. Think about the APY that you get on a savings account. This is a really good increase in value, 50%. So I think that's really nice. I think it's good to not take that for granted because, this could be retracing more, like it is now at $11.37. That is not 50% to the upside and actually getting to 12.10. That's more than 50% to the upside, especially if the dip was purchased at $7.56. We could actually take a measurement of that from that low to that high. That represents about a 65% swing to the upside, a little bit less than $5 a share, right around $4.90. And considering that, we should also be thinking about this wave here, wave 3, being the largest wave. So was this more than a $5 swing? And so we can see that from $4 at the low up to $9.40, yes, that was definitely more than $5 to the upside. So that still does qualify as the third wave of this Elliott wave cycle. And this could most definitely be that fifth wave to the top. But so now it looks like we could potentially be in a corrective or lettered phase to the downside, with that being wave A, and then a bounce wave B to the upside, and then continuing down with wave C. And so looking at the chart here, one thing that stands out to me as maybe negating that is that following this pullback coming down to a low of $9.32 hit on June 25th, we saw a move to the upside that actually surpassed the high of June 18th, which again was $12.45. We saw a high of $12.60. So, maybe that does negate this pattern. However, I think closes are really the most important thing, because intraday pricing can really just be used to give bulls some false hope that this might be continuing higher. But what this actually suggests to me is a lot of weakness. Not only did we not get a close above the high here, that was $12.45, we got a wick higher than that and a close not only below the close from this day, which was $11.39. We saw a close at a price of $10.84. So even getting below this 786 level at 1094. So that makes me think that this pump up to 1260 was really just to, be offloading shares, to be dropping shares off at 1260, people getting excited, oh, this is going higher, it hit a new high. The reality is that was a liquidity dump. People, big institutions, whoever, dropping shares at 1260, 1250, above 1245, and people getting excited, bulls getting excited. Oh, it's going higher. Oh, it's going higher. It's not going higher. This is the top. 1260 is the top. This was wave A. This was wave B, getting a lower close. So it does still match with this pattern. And right now we are going to see a wave C going to the downside. And so, that is what we see here. And so my thoughts are that this is likely coming down to $9.40. However, that was wicked down to on June 25th, as I had mentioned, hitting a low of $9.32. And so that while that level was broken, and it might be, kind of convincing, kind of compelling that we didn't get down to that level, we didn't get down to the 50%, which is 940, we wicked down to here, respecting the 618 at $10.04, having hit a low on July 2nd of $10.17. And so what I could see happening is this just starting to really break down, breaking below $9.40. I think it's going to be pulling back even lower. And with that being said, let's see. I could see price coming down to, what seems compelling to me? 734, that does stand out. Maybe 670, maybe we are going to come down to that level. I think that this golden pocket here, ranging from $5.89 up to 606, that corresponds with the high over here of $5.77, right around there. So those confluence of levels, I think price could be coming down to there. And so one other thing that we could do, it will clutter the chart a little bit. I'm just going to do a retracement from the low here of $2.12 up to that high of $12.60. Just going to make sure that those levels are lined up just right. and I'm going to lock that into place. I'm going to make the lines kind of thick so it does stand out relative to the other ones, and we can kind of get an idea. Look, again, golden pocket for that full retracement. Coming back to the high that was hit on May 20th, that was at a price of $5.77. Like I had said, this golden pocket for this full retracement here, that ranges from $5.79 up to $6.12. And yeah, so I mean, I could see price coming down there. I did mention $7.34. The 50% retracement would be $7.36. So, looking at the chart, maybe you could argue that this is a bull flag. It's going to break higher. I see that this wick to a higher high, but a close much lower. I view that as a topping signal. And I think that we need to take a step back and recognize that a swing from $8 a share up to above $12 a share, a 50% swing, that's a great, great move. And, one really has to ask himself now, am I in the stock holding business or the money making business? And right now, a 50% swing over the course of a month, that is great. Congratulations to those who participated in that. I did not, but that's great. Maybe it continues higher. There are other trades. I think that this will be pulling back, and I could be wrong, but I also could be right. I do think that I'm probably jinxing it by saying that this is going to pull back because I was right before about this continuing up to around 12. Although that was based on an assumption that it'd come back to 670. I was wrong then. I'm not always right, so maybe this is a bull flag, maybe it's continuing higher. Volume has been low, so it really just needs a surge in volume to break higher. And so, yeah, I mean, for me, as far as risk management goes, I would be happy with these gains, but I also wouldn't be surprised. Like I said, with volume being low down here, if there is a surge in volume, it could definitely be breaking above 1260. But this to me, with that wick higher, close lower, suggests that, the top is in. And I would like to see a pullback to at least $7.36, if not sub 6. But then at that point, maybe it just fades more. So I think it's pretty risky at this point. I think that the gains have been made. But like I said, I could be wrong, and I probably am. But I think that the top is in. So those are my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thank you so much for watching the request, and happy 4th of July. Take care, you guys.